Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Hope you all had a nice, long, relaxing MDW. Spencer Israel here with Joel Elconin and Dennis Dick on this morning's pre-market prep. We are excited to get back in the saddle after the nice, long weekend. We have some things we want to discuss, mainly the chaos over in Italy over the weekend, and that is hitting the markets this morning. So we'll talk about that and the reaction. You know, we talked a lot about Deutsche Bank last week, and that is really being hit this morning. So we're going to follow through on our Deutsche Bank conversation from a couple of days ago. We have a couple earnings, but not many reporting later in the week. Maybe we'll preview those. We have some interesting ratings to discuss as well. I saw Ford and Roku and a couple others. So we'll talk about the biggest ratings changes, upgrades, and downgrades that analysts are making today. Two guests on the docket. First up, James Putra will join us. He is with TradeStation. He is their head of innovation. And then at 8:35, we have Nick Chahine, author of Create Income with Option Spreads. Going with the white charts today at Joel's suggestion. So, Joel, what are the S&Ps doing?
Futures are in the red here, and they are deeply in the red by $17.50. They're not giving you the right high. The right here high is 27.31. We hit that early on Sunday night. There was a little euphoria over a summit between North and South Korea, but the big news came in the Italian elections, and down we go. We made it to 26.90 and a quarter. That takes you down to a nice level at 26.9275. That was your May 10th low. So we're in a trading range. We're at the bottom of the trading range. Very important day for the market to shrug off this bad news and recover. You have crude oil futures in the red by 90 cents at 66.99. But that got into the 65 handle late last night. Gold back up over 1,300, trading at 13.07, even up 330. Silver not doing as well, down by a penny here at 16.44. And Bitcoin, we'll talk about Bitcoin when James Putra comes on, up $20 and just hanging out over the low of the move. Since the futures came by on, the low of the move in the futures has been 5,991.39, so $6. Huge level here in Bitcoin futures. And Dennis, let's pull up the EWI, and it's all about Italy this morning.
Yeah, problems here over in Italy. Spencer, fill us in here. If we weren't paying attention over our Memorial holiday weekend, now we got to pay attention here this morning because we got some major problems over here in Italy. Talk about these problems.
Well, they had an election a few months ago. Everything went smoothly as far as that concerned. Then it came down to getting the new president's appointees appointed. Current President Sergio Mattarella refused to accept the nomination, the new finance minister's nomination. This guy hates the euro, the nominee. So that guy was rejected. So rather than go forward, we are now the two parties who agreed to work together after the election, the two parties who received the most votes, who are working together to form a new government, they just abandoned ship. They're out now. So we have no one essentially to run the government. So now we need to have a new election.
And if you look at Italian bond yields exploding here this morning, and I mean majorly exploding there, straight up is the chart there on the Italian bond yields. We don't have that chart for you, but that is obviously some major concerns over there. And now you look over at the European banks, and they're getting killed too. Let's look at the EWI first, because that is your direct hit there. It's the Italy ETF, and it is trading down about 5% here in the pre-market. So it's a pretty good shellacking. Italy, this ETF had been going down for the last couple of weeks. It continues to go down here, and now we're going down to 52, or yeah, I think it is 52-week lows here, breaking down to lows we haven't seen since back before August of last year. So EWI going down here, dragging down a lot of the European issues with the 2 Joel. Gets quite technical as EWI, and I want to look at some of these European banks.
I mean, how long, have we had like different We had the Greece debacle a few times. We had the
Yeah,
Brexit.
16 was really the when we really were having problems in Europe. I think it's coming back.
Yeah, well, long-term support has been broken here, and just $30 had just been a good level since November of 2017. And we broke down through the 29 handle. If you're looking for continued follow through on the downside, back in June of 2017, this ETF hit 27.76. That's just under $28. That could come into play today, and not good price action going into it. So Street kind of got this one right going into the election, and here we are. A lot of chaos over there in Italy. I'm glad I'm not over there.
Let's look at the fallout into the European banks. The bank we talked about multiple times last week saying, what is going on with Deutsche Bank? The media really wasn't covering it, but I mean, here we are. We're back at like 12.50. Well, actually, when we started talking about it, it was around $13. We're like, this is starting to look really ugly. It's now getting killed here again this morning. This is all due to Italy again and yields flying over their bond yields. But 5.73% DB is trading down this morning. It's a mess. I am short Deutsche Bank preferreds. I shorted them last week as I was talking about. Held them through the weekend. They're expensive to short, but I was like, I don't know what's going to happen. So obviously, I think I'm going to get paid a little bit on that over the weekend here. But let's look at this DB chart, Joel, because we have not been this low since I believe we got down here. Did we get down here in 2016? Yeah, we're a little lower in 2016.
Yeah, 1136. Concerns about Deutsche Bank's investments or ties to the Italian banks here. They're all intertwined one way or another here. 1119. You're getting awful close, Dennis. 1119 was your low in Deutsche Bank in September of 2016. My charge going back only to 2001. So here we are. Let's see how we're trading in the pre-market. Pre-market 1136. So that 1119, at least you got to bounce off there in September of 2016. We'll see if that happens again today. You got to figure the majority of the action, has already taken place since those markets have been been open for, quite some time.
Yeah, well, they were open yesterday as well. Yeah. So you've seen some trading action here, and you've seen you're seeing Deutsche Bank really get hit on the chin. Just putting this in perspective, though, DB has not been this low. So yeah, we got down there in 2016. But if we take out that 2016 low, my charts don't go back for enough. I go back to 2002. That's how far you were saying you go back there too, Joel. 2002, we were higher than this. So this is, you're talking about a 16-year low. Here we are in one of the best bull markets, you think about in the last 3 or 4 years or 5 years. Deutsche Bank has pretty much been, at least in the last year, straight down. Stocks making new 16-year lows here. Tell me there's bigger problems than you think. So this could be something that can drag down, and this could be the next crisis. In 2016, when we had all the problems over in Europe, it started to drag down our markets as well. Our markets are sitting up. Our markets are trying, looking like they want to try to make new highs. But this is going to be a big time drag, especially on the financials. If we look at our financials this morning, they're all trading down as well. Bank of America trading in the red by over 1%. JP Morgan over 1% down. Citigroup 1.5% down. So you can see here our financials are weak as well. And really, when you think about, where we've been, and, a lot of the tech stocks are trying to make new highs. Some of the Momo ones trying to make new highs. The banks have lagged, and maybe there's a reason for that lag, and maybe that reason is Europe. But, you look at the other European banks too. UBS, it's not just Deutsche Bank. UBS is at 1545, breaking down to a new 52-week low, or at least a new 2018 low. You can look at RBS, which is Royal Bank of Scotland. That's breaking down, although it came up a little bit in May, but starting to get weak again. Barclays, which is BCS, that's trading down 50 cents here in the pre-market too, or 40 cents. It's getting close to its February lows there. They got a lot of problems in the banks here right now, and that's a concern for the overall market. And that's really what the drag is on the S&Ps here this morning. So don't call it a financial crisis, but over there in Europe, it's starting to look like it could be the start of one. So I don't know if that's going to continue to drag over here. We obviously don't know how much repercussions are going to happen here. But when you see these stocks making new 16-year lows like Deutsche Bank, is telling me this problem. They had massive layoffs last week, telling you they're trying to cut expenses because they got some issues. They got some debt. And they know they're in for some tough sledding here coming up. So just keep in mind if you're trading the banks that they're going to be weak here this morning because of obviously what's happening over in Europe.
Yeah, and I haven't heard much from Mr. Draghi yet. He hasn't come out with any bullish statements or anything like that, so that's always a factor. U.S. banks are trading lower too. Bank America is trading down 37 cents. Goldman Sachs is trading down 379, and that Goldman Sachs chart, I mean, for the quarter, I mean, this thing is hanging out near the lows of the move, and it looks
the banks are showing trouble, Joel. It's a great point.
Yeah, look at that. It had the top over 270, and then you pulled off, and then you could call that another head and shoulders top since it made that low under 230, rallied up to 245. Sector that have been leading the market, but Dennis, how many Greece we had this, and the French bank and SocGen. I mean, seems like these come about every once in a while, and somehow
they seem to shrug them off, and eventually our banks start to go higher. But it's telling you in the last couple months, you look at the divergence that we've seen, even if you look at the XLF, not even close to the highs that we were back, in February when we were up over $30 in XLF. Now we're 27.5. You're talking about 10% off of the highs, which is a much different story than if you look at stocks like Apple, stocks like Netflix making new highs. Facebook is not far off the highs. The banks have significantly lagged, and maybe there's a fundamental reason for that. The market's smarter than you think sometimes. Right,
and also, basis on how much interest rates are going to, move up through the remainder of the year. So the market losing one of its leaders early in the year, that would be the financial sector. We'll see if another sector can pick up the slack.
You can see a little bit of market defense happening here too, or TLT, significantly higher here this morning. So a flight into safety, big time safety trade here this morning. TLT trading up. That's obviously bad news for the banks there too, but that's all related over to Europe as well. But banks going to be relatively weak here this morning. We have some individual earnings stocks too, Spencer. Momo, I saw reported. Who else do we have this morning?
Momo was the first one that I saw since you mentioned it. We'll go there. Momo reporting Q1 EPS 69 cents versus a 50-cent estimate. Sales 435 versus 396 $1 million, so a nice numbers for Q1. Q2 sales guidance coming in higher as well. 429 million was the estimate. 470 to 485 is what they see for their Q2 sales.
I messed this one up. This is one that I had, and I threw it in my invest portfolio because I didn't mind the valuation. I want a little more exposure to China. I threw it in my invest portfolio at $25. It ran to 40 fairly quickly. So you can see, actually, I think it was 26. I think it was back just at the end of last year. I'm trying to remember when I bought it. Yeah, so we got down to $22, $23. And I think I bought it around 25. That was towards the end of 2017. Now I'm going to hold on to this for a bit. But it ran up so fast. February, March, it got up to 40. And then I had the big whoosh down. And then it kind of came up a little bit there. And I was like, you know what? It was looking a little head and shouldery back in March and April. I looked at that. I talked myself out of it and sold it and booked the gain. It was a nice gain. I made 30% on it in 3 months. So it's hard to, balk at that. But now I look and it's just blasting off here too. So I let a little head and shoulders technical pattern. Do you see what I was looking at, Joel, on the daily? The March, you had the little left shoulder, and then, right at the end of March, we popped up to 40 and formed the head. And then April was the right shoulder, and I got scared. It did go down a little bit after that, but obviously it's come back. So sometimes, don't let a pattern shake you out. Obviously there's a lot of different, things going on with stocks all the time, but the Momo was on my side and I sold it out.
Yeah, I just wanted to pull up the daily here to get a better reference of what you were looking at here. And it's been a yo-yo pattern here. But now you're trading up in the pre-market. Let's go to the pre-market chart. Give you your pre-market high and pre-market low. Let's see here. You just got these trades up over $44. 44.44 is your pre-market high. Currently trading 43.76, and some decent volume is traded this, so you can't ignore that. Go to the daily charts. We're challenging the all-time high here, Dennis.
Yeah.
Look at this.
I wish I still had this one.
All-time high, folks, is 46.69. We're currently $3 away from that, but I think ahead of that, if in fact we get up to 45.5 area, that's $1.75 away. After that, making that all-time high, there was a triple top in that area. Coming back on the downside, if this does go into reverse, it could be a little bit tricky, just because you got a lot of air. Your after hours pre-market low is at 43.15, so I'll call that minor support.
All right, we're a minute late for our first guest. At least we're supposed to grab our first guest, James Putra. He's the head of innovation at TradeStation, and he can talk. Joel, you spoke to him at the FinTech Awards. He can talk cryptos. He can talk pretty much anything. But we're gonna go grab James Putra, and we'll be right back. All right, having a hard time grabbing James Putra, folks. So you're stuck with us for now. Spencer Israel, Joel Elconin, Dennis Dick. And let's jump over to some of the stocks that are reporting earnings later today after the bell. Let's take a look at the chart of CRM, guys, Salesforce.com.
Well, CRM has been, an interesting stock because it's been, straight up basically. I mean, you look from 2012 over the course of the last 6 years, $30 up to $130. But as of late, it had a little hiccup there back in March, sold off. It always seems like the hiccups get bought in this thing. But we are really close to all-time highs here on CRM. So I don't know if you can say it's run up into the earnings report, but it's funny. This earnings season, has been difficult. It seems like any stocks that are trading near the highs have actually been hit. So, they got to blow it away tonight to go higher. Can CRM blow it away? Absolutely. And tech is still getting loved here right now, too. So I don't know if I'm necessarily betting against this one going into the report. What do you think, Joel?
Bunching up near the top. You have a couple highs here in the issue at 129. Your last two sessions, 29.25 and 29.38. So there's a little bit of resistance. If it does go into rally mode, that'd be $2 away. And then if in fact you can continue, and if you're trading this after hours, you do have a triple top at the all-time high. The all-time high is 131 even. You hit that twice in mid-May and flanked by 130.85 high. So there's your resistance points, 129 and 131. Coming back on the downside today, 127.62 was your low. We're trading right there, but keep an eye on Thursday's low too, because that's 27.39. After that, you got a big drop in here, a lot of air to your 3-day low at 24.58. So going to trade pretty technical here ahead of the report.
Then you got Hewlett Packard, the legacy company, HPQ. That's your 3D stock too, going forward. It's going to report there tonight too. 2.55% dividend. It's one that's on my radar. I still want it because I believe, long term, you're going to see this as a major player and the major player in the 3D printing industry, which is for real. It's just a matter of, who's going to be the survivors, who's going to be the major players, how they're going to make this, obviously a big cash, cow for them eventually. But I think HPQ is going to be that player. They're obviously in the industry. They're just not as big as, maybe that they could be. I think they're going to grow, though. So it's on my radar to put it in my investment portfolio kind of as a value play, but I just can't pull the trigger for some reason. I haven't pulled the trigger yet. Joel, technically speaking, what are your thoughts?
$22, Dennis. Keep an eye on $22 today. Your last two matching highs, 21.38, 21.90 highs. So call that a triple top. Big seller hanging out at $22, coming back on the downside. Tight range on Friday, 21.80 low. But your good support is at the 21.50 area. Wednesday's low, 155. Thursday's low is 144. So kind of tight. Probably trade within those parameters during today's session. 22, if you get a chance to play that after hours, it should be an interesting level as well. But technical, I think I'll trade technical despite the market being in the red. Might see some shorts wanted to square up here ahead of the report.
We're still seeing a lot of tech, or a lot of retailers going to report. Wednesday, we're going to hear from Coors, KORS. We'll hear from PVH, Dick's Sporting Goods, DSW. So a number of retailers going to report. We know the retailers have actually been very hot as of late, but a stock that has been cold going in is Dick's Sporting Goods, DKS. It's basically hanging out near the lows. What are your thoughts here on this one going to the report?
Boy, oh boy. Major resistance at the 35. It's been 30 to 35 for quite some time. A few dips under that, but let's see. What was your low? Boom. Your low recently. No, I'm sorry. Yeah, 30 to 35. And here you are knocking on the door of the lower part of that trading range. So I think I'd be trying more to pick this up in the lower 30s. And, a lot of the other retails, similar charts to this have popped. So I like the extent.
Like you compare a Foot Locker. So what Foot Locker did last week was absolutely incredible. Stock in the doldrums. Seems like, they report it's an okay quarter and they just blast it off. And we saw this happen with Ralph Lauren. We saw this happen also. Who was the other big one? Tiffany's. Tiffany's blasted off too. It was like blast off week for a lot of the retail stores. I don't know. Now you get to a point where, okay, so maybe some people are going to start expecting this to happen. And when you expect things to happen, they don't happen because it means everybody's on that same side of the trade. So Dick's is set up to maybe, do something like a Foot Locker because it's been in the doldrums. If they do, come out with a nice beat, I think it will pop. I guess it just depends on, how they're doing over at Dick's compared to something like a Foot Locker's. It's not the same business, but they do sell shoes. They do sell, a lot of, stuff, in sports. And I don't know. I'd be scared shorting it into the quarter, but I'm also, I think it's going to have a big move either way. What's the, here's a play. What's the implied move there in DKS? Because that would be interesting to see.
I do not have that platform open. We'll save that one for Nick. I bet
we got the calls. Yeah. So we'll bring that on to Nick because maybe this is a case where you should actually buy a straddle. Because if it's not that much, like I think Dick's could have a 10% move either way, just because of what the other retailers have done. So if you can get the straddle for like 3 or 4%, maybe there's some money to be made there. I hate buying straddles because obviously you're buying a call and a put. So, you're losing, and obviously you're going to lose on one of those positions. But I just brought it up, though. Dick's implied move. It's fine. I guess I just guessed that I said, I bet you, I was thinking, it could have a 10% move in either direction. What do you think the implied move is here for DKS?
2.8.
9.6. It's 9.6. So the options cost you 10%. So now it's like you just can't make money. So they're already ahead of you on it because they've seen how volatile the retailers are and they've jacked the options already for you. So other implied moves for this week, KORS, 9.7%. DSW is going to report Wednesday. Actually, I'm just grabbing this from Option Millionaires. He just tweeted it out. So that's why I just grabbed that. DSW, 11.6%. PVH, 6.8%. So there's your implied moves for the stocks that are going to report tonight. Later on this week, we're going to hear from Lululemon. We're going to hear from Costco. We're going to hear from Dollar General. So Box is reporting, VMW. So Workday, you actually got, a pretty big earnings week. So this is like, you're coming out of earnings season now, but it's like the last hurrah here.
Yeah, I'm for the Dicks. I mean, if I had to go, go one way, I would go farther out than this week. And I wonder, like, if you could get some 35 calls and, something like that. I don't know about trading the straddle, but
maybe just play one side of it.
Yeah,
to try to save yourself some of that premium.
Yeah, a little bit on the
maybe
downside.
Not a bad call.
Yeah, I'll take a look at the 35. I mean, some of the other retailers, Macy's, and that had its big day. It's struggling now, back over $34. We all know what happened to Tiffany. That thing, 129.21. Buying expensive stuff. Ralph Lauren. Let's see here. Ralph Lauren. That's keep it going. I mean, we're talking different parts of the retail sector, but you got to think something like Dick's. You're coming into baseball season. You're coming into fishing season. After a long winter, people are getting those new goods out. We'll see if it's reflected.
I'd be scared to short it.
Not shorting it either. Not shorting it either. Can't even come up with a wager on with this one on you, Dennis. I mean, this is
both wishy-washy.
Yeah.
So I figure where I was just going to go. I was going to just talk about. I lost my train of thought. I had a good one too. Oh yeah, Disney. Jar's talking about Disney at $100. It is getting hit here this morning. Solo movie came out over the weekend. Did anybody see it? Did you see it, Spencer?
No, not yet. And I think that's the problem is that nobody saw it.
I actually, it was very disappointing. The numbers there. I watched a couple of reviews there, and I don't think they're great. So Rogue One, which was your in-betweener between the Star Wars 2, was excellent. And, the viewer, and that was excellent for him. I'm not hearing the same about Solo. I'm actually hearing that it was disappointing from some of my Star Wars fans there. So I was pumped to go see it, and now I'm not that pumped to go see it either.
Well,
and the box office numbers were not good. Do you have those numbers, Spencer, over the weekend? Because that's why the House of Mouse is trading down here this morning, because the Solo movie was a disappointment, at least at the box numbers.
For what it's worth, I heard good reviews about it. But
you did hear good reviews?
Yeah, I heard good reviews. It took in about $83 million over the weekend. Which was well below Rogue One's $155 million. But this is also a really expensive film because they had to reshoot it. So I think the film cost somewhere around $200 million. And the fact that it came in way below Rogue One's opening weekend number, and it was a 3-day weekend. It was a long weekend. You expect to do well over a long weekend, and they didn't. Whether or not that's the reason for Disney weakness this morning, maybe who can say?
It's 100% the reason, I think.
Okay.
I mean, the overall market's not helping Disney here this morning,
right.
But it was going to be down either way on these numbers there. So down 1.5%. We're coming to the big $100 psychological level once again here. I am long Disney in my long-term invest portfolio. I'm actually bought it right around this price. I was up a little bit there for a few days. It's pulled back down. I just put it in the investment portfolio about a month ago, right when it had this long consolidation period between 100 and 102. It looked like it wanted to break out. The Avengers movie helped it a little bit there, but now the Solo movie is hurting it, so it's coming back into that area. I mean, major support down 98. That's $2 lower. I don't know if you're going to get ugly here and get down in that today. I guess it depends what happens on the overall market, but I think you got major support down 98.
Just looking at the daily charts, you've really been in a range going back to really March, and that 104 area has been very pesky. Topped out over 104 a few times in March, and then you did the same thing in May. Didn't quite. You did. You get up to 105.48, but back down here. I don't know, Dennis. This just kind of looks like, I mean, this thing's just been flagging since it made that high in 2015, up at 120.65. It's just been holding on. So I'm not sure what the catalyst is for the House of Mouse here, but just a trading range, and you're probably getting a nice dividend off it, so you can hold it for that.
It's not that huge, though. It's 1.67%. So you're not really leaning on your dividend that much, especially in the rising interest rate environment. So I think, I still look at it long term. I mean, you got Netflix trading with a market cap higher than Disney at one point in time last week, which is absolutely asinine in my opinion. I mean, you've got a company that makes a hell of a lot of money, maybe potentially the best brand out there. They've got their competition for, what is it, Hulu they own for Netflix? Fox and Disney own Hulu, or
NBC owns Hulu. Comcast.
Okay, but they're
Comcast.
buying that from Fox, or trying to buy from Fox, right?
Hulu? No. You're right. Fox also has a stake in it. I forgot about that. Fox has
I
a stake
think
in
so.
Hulu.
I think Disney, if they get this Fox deal through, is going to be the major player in Hulu.
Yeah, you're right.
Which is,
you're right.
And I'm not caught up on all these tech stuff. So I've got my Netflix. I don't have my Hulu account. Is it competitive for it? I don't know. Maybe it is. So, and in any regard here, I just can't believe Netflix is worth more than Disney. So long term, I think I'm not coming in here and saying sure Netflix. Things making new all-time highs. We had Jeremy Newsom on our show last week saying it's going to 400. It very well could. I mean, it's been it's in rocket ship mode here once again. So I'm not coming here and saying to short Netflix at all. I'm just saying longer term, Disney worth less or Netflix worth more than Disney seems crazy to me. So from a long-term investment portfolio, I'd much rather own Disney than Netflix. But in the short term, right now, Netflix is hot as a trade. Netflix is probably going to keep going.
Josh Brown had a really good blog post about Netflix's movement last week as it relates to Comcast and Disney and how people are just are using ratios to justify how the move makes no sense, how Netflix can possibly be worth more than Disney and Comcast when they have a fraction of their sales. And Josh Brown basically his entire point was the ratios aren't forward looking, and the market is pricing in what people believe the future price appreciation will be today. So the ratios that you're using to justify the quote unquote backwards valuations are just they're not forward looking measurements. So don't do that. Is basically his point.
I'll tell you something. I heard the same argument in the year 2000. I heard the same argument in 1999, different ways. CFA Institute wrote a whole chapter for the CFA magazine on how to value companies with zero earnings. They wrote this for their exams, for the CFA Institute exams. They had literally like 20 pages on how to value stocks with zero earnings. You know what happened 3 years later? They burned that chapter right out of the curriculum because how to value companies with zero earnings in the long run? It's zero. Now, Netflix is not going to have zero earnings. Netflix is going to have earnings power. They're obviously reinvesting in the company for growth. But I will tell you, in the long, long run, it still matters on what you can make. And I don't see Netflix as more of an earnings powerhouse looking forward than Disney. I mean, you've still got all the brands, you've still got the movies, you've got so much more going on. Netflix also is much more exposed. Like, think about how diversified Disney is. There's so much. They've got the parks, they've got everything, they've got, then even if this Hulu thing helps for them, there's so many more, revenue sources. Netflix is really a one-trick pony. They're showing content, and which is, and they've built a wonderful platform. I have it myself. I love it, but they're still a one-trick pony. And if something better comes around, you will see that valuation get slammed in a hurry. So I just don't think they're, as positioned against competition as a Disney is with all the diversification that Disney has. That's my argument for it. Now, I'm saying I believe Jeremy Newsom too. I think it's going to 400 too, Netflix. So I'm not coming here shorting Netflix today. But I'm just saying, if you're sticking Netflix in your long-term investment portfolio and saying, I don't want to, if you're trading in Disney right now for Netflix in your long-term investment portfolio, I think you're not going to be happy with that decision in 10 years. Short-term, trade it though.
All right.
Joel, what's your thought? You've been quiet in the background.
I don't, because we have Netflix, and I hardly watch it. I don't really watch it that much.
I watch it. I like it. My kid was watching Dora on it this morning, so it's good. I mean, there's other ways they can, they can cut back or down on this account sharing stuff. They could jack it up maybe a few bucks. They can make some money. It's gonna be profitable. It's worth something. Is it worth more than Disney? That's my argument. I don't think so, but I'm the old CFA pencil crunching, figuring it all out. But I tell you, I've invested that way for 18 years and it's worked out okay for me. So I'm going to stick with my old boring methods. And, somebody we should have on is Chris Banyan. We had dinner with him over the weekend on the show, and he sits there and he crunches out numbers, and, he's the same way. He got the CFA behind him, crunches it out, and he uses technicals too, and he'll go with the momentum on some stuff too. But, and he likes the growth, but, he's the same way, same type of investor, where he's, looking, a little bit more fundamental analysis, and longer term, it seems to work out for him as well. So it just blows my mind that it can be worth more than Disney.
I'm waiting to finish up the House of Cards, but I just want for our traders out there that are active in Netflix, you have a potential double top at the 354 area.
Oh, come on.
Double top. Double top at 354 on Thursday, 354.36 on Friday. All-time closing high, 351.29. Nick Chahine, how you doing after the long weekend?
I'm doing great. Pretty rested. How about you?
I'm rested too. So talk about how you handle the events over the weekend. Did have, the election, going Sunday night. Sunday night actually popped the futures up nicely. I think that was because of the secret North Korea, South Korea summit. But give us your look over the pond here. What's going on with Italy and the effects on our markets?
I think this is just a new version of an old headline. I think we called it, Grexit first, Brexit second. Now this is Italy leaving. So I think I heard Italy leave and Frexit. What's next? I mean, it's the quote European experiment ongoing for umpteen years.
I like Italy. I like that. That's good.
Yeah, it wasn't mine. I'm not taking credit. It was somebody else's. So. But from a price action perspective, which is what your question was about, I think it'll end up to be a non-factor for the long term. In fact, I had already plotted a dip to this area as far as the S&P is concerned. So nothing in the price action here is new. So yes, we have a spike in fear, but if you look at Netflix, which is you just talked about, it's a frothy stock by a lot of people's perspective, and not a good fundamental picture. And these usually sell off hard on bad fundamental when there's bad reasons that are fundamental in the stock market. So today, I think Netflix is flat-ish. Red
up, straight up, so strong.
Oh, okay, there you go. So
it's trading in the green.
Scared markets don't buy Netflix. They buy something like Apple, and they sell something like Netflix faster than Apple. So I'm looking at the small caps this morning and how frothy stocks perform, like Netflix, Roku, things like that. If there bids under the scary stuff, then the markets are not scared, and the VIX spike probably will retrace lower just like it did a couple of weeks ago.
So, did you hear our argument? Just bring it back to Netflix. What do you think of Netflix being worth more than Disney? Just move away from the technical, move away from the short-term picture for a while.
Why are we comparing the two?
They're both media companies.
No, but Netflix doesn't have parks and recreation.
Well, that's why I like Disney better.
Well, they have different reasons. I can be long both at the same time. They're not one or, is my point. They're not a replacement for each other. They're in competition with each other, just like Facebook is in competition with Google. You don't ask why is Google worth more than Facebook, in my opinion. So they're not comparable one-to-one. They just happen to play one company's playground is the same as part of the other one's playground. So it is I can be long both. I do go long both on dips. In fact, I am long Netflix on momentum, profitably so. So I'm not seeing a double top. I'm seeing an opportunity. So, and if Disney gets hammered, I'll sell puts in Disney all day long because of the reasons you like it. So I think that they are not mutually exclusive.
You can own them both. Nick comes in and makes everybody happy.
Yeah. Can't we all just get along?
Can't we all just get along here? What's going on here in Europe? Let's just go back. We just mentioned briefly, but what about Deutsche Bank? Let's go specifically to this one. We got it. We were talking about it last week. We're going to talk about it again here. We're going to be probably talking about it for a while here now. We're approaching the 2016 lows. We're talking about stock, basically making, decades of lows here. I don't know, like our charts went back to 2002. I'm not sure how far years go back, but I can't get any lower price than that 1116 area that it had in 2016. And now we're 1153. I mean, there's some major problems with this bank, is there not?
Yes, but I read a few reports here and there that it's specific to that bank rather than a systemic European issue. So that's the reason why we're not freaking out financially like the 2008 debacle, where every bank was in the same pit as the other one. So in this case, the chart, there's no sense of charting it because mine, just like yours, ends, this is a low. So there's nothing to be told from the chart except that will the government save it? Their government. So I don't have any insight on it from a technical perspective, and I'm not an expert there. But what I read is from the experts is that it is specific to that bank rather than a systemic issue.
Nick,
Yep.
I'm going to go ahead and take a couple on. I'm looking at the YouTube chat here, and they're asking about Footlock. Was Footlocker, did you play that on the options at all, Nick? Did you try and do anything in FL or not?
I can't remember off the top of my head. It was a busy couple of weeks
Okay.
because I had some new members that wanted to look at different tickers. So I ended up trading some stuff I don't usually trade. So I'd have to look at my my history.
Well, let's move forward here, and we've got an interesting chart. Dick's Sporting Goods reports after the close, been in a trading range from 30 to 35, kind of near the lower end of the trading range. Some retailers have come up with good reports, and we had in the Google chat, someone said, "How do you execute a straddle?" This is
Okay,
Jazzly Man.
so-
So take a
so
look at
if it-
Dick's.
Yeah, if it reports this week, I would look at the options chain and see how much it is and see how much of a move I would need in order to make money. So the straddle is basically buying the line, basically buying both outcomes at current price. So I would have to buy the call and the put and hope that the move, regardless of which direction, is bigger than the cost out of my pocket. So it requires some people that know what they're doing. I don't do it a lot. Actually, I don't remember last time I did it, but it works for some people. And some people do the opposite and sell it because they know that, okay, if the reaction is going to be within this and the deflation of the volatility, the fact that the event goes away, so all the premiums get deflated, that are not in the money, then they make money that way. So it's your call versus the other person who thinks the exact opposite of what you think. So do your homework. But the short-term reaction for an event like earnings is a complete coin flip with the direction. So you take that out, but now you need size of move. So you have to, you don't have to guess the direction of move, but you have to guess the size.
All right, and you gonna put anything on in this one, or
I'm not the price I think is somewhere around $3 plus or minus
Right.
the move. So if I'm playing a lottery ticket on this for the directional bet, I would stay within the $2.50, because then I would have to guess direction and size, and that's just not ideal. As far as the chart's concerned, I really don't know much about them, but aren't they the last guy standing, so to speak? So I don't like the fact that they're bouncing on the floor of $30, and if that floor breaks, then they shoot lower. So there's a potential for 28, and on the upside, 34. So these would be the things I would look at, but it's a complete guess as far as directional. But the straddle, you better hope it moves more than the cost that it's going to be out of your pocket.
coming out of the chat, Brad D, opinion on Starbucks. Any growth potential left for Starbucks?
I'm a fan of the company. I like coffee. I don't buy it at Starbucks, but I do like the fact that people complain about long lines. So from that perspective, big dips in Starbucks have been money makers for me. And from the perspective where I sell risk into what others fear, if I see potential, like the reason why they're selling. So if I don't agree that the reason is viable long term, then I sell puts in it. Otherwise, I sit on the sideline. And if you can see, it's been stuck in a range, a wide range, albeit. So, but I have a clear floor-ish area. So anytime it comes near that floor, I sell puts well below. So, short term, they do have earnings, but not for a while. I don't think. I think for a couple of months maybe. But I don't see anybody kicking the coffee habit anytime soon. And Starbucks is the name to be in. And I think the retail problems that they have, like executing long lines and all of that, that's just transient, in my opinion. Plus, they had the little tizzy in the headlines, but they handled it pretty well, I think, because we're not talking about it now. So,
and actually, by coincidence, today is the day where they're closing like 8,000 of their stores for sensitivity training or whatever it is you want to call it. But I actually was in Starbucks on Saturday for the first time in, I don't know, like 8 months, and it was like 8 in the morning, and man, was it busy. 8 in the morning on a Saturday.
I have busy before. Yeah, I have friends that, even when they're down on their luck, their muffin and their coffee is coming from Starbucks. Every day before they get to work, their stop is at Starbucks. So I think it's a more an experience. They say it in the media on CNBC, experiential, that this is part of it. I mean, you see the same people, they say hello to you, you smell the smells, and it's hard to kick a habit like this. It's a fun thing to do, but it's expensive, but it's fun for somebody who's commuting. They're not going to kick it anytime soon.
One more for you here. We'll do two more real quick. Rig, you caught that real well.
Yeah, buddy.
Yeah, you caught that one, and you caught it on the upside and the downside here. Are you still in that one? What?
Yes.
You leaned on the double top. What brought you into Rig?
Okay, so Rig, the upside came from somebody. I gave him credit that I don't remember who it was. So I said, thank you for bringing it to my attention. And we caught it perfectly on the way up, way before that white cup and handle formed. And then I think I got out near the top at 14. I said 14 or bust. Down from it. It was in the 10s or 11s. I can't remember. And it was a fun trade that didn't cost much via calls. And then we got out. And then I said, you know what? Now I see a breakdown. Potential just from the volume price action, from the volume profile, that, there might be a reason for it to sell off. And I took puts, shared it, and then exited a couple of times and reloaded. And then last week I said, you know what, there's a chance to break 11 or 12 or some low number. So I took puts again, and I'm in those puts. And I think it's down this morning because oil is also down. And this, by the way, was a bet that goes hand in hand with the bet we made on the dollar. A spike in the dollar that we saw and charted, I thought would put pressure on oil because oil is priced in dollar terms. And the dollar is pricing out exactly the breakout we saw, almost to the penny probably this morning.
Nick, one more. Can you look at Baba for us?
Yep. Okay, so this is one of those companies that is not falling. And if like Netflix set an all-time high, Baba is setting highs or near there, Apple is at a high. So there's really no real fear in the market. And headlines like today's Italy election issues, as long as they don't blow up in our face, there's no reason to short this one. And if I'm long it, I'm staying long it. It's not a clear point of entry unless your thesis on the whole market is going to be higher in the next 4 or 5 months. But if I'm long it, I'm not getting out.
All right, Nick Chahine, author of Create Income with Option Spreads. Nick, thanks so much for the time as usual. Have a good one.
You too.
All right.
Thanks, Nick.
All right, 8:48 now, 12 minutes or so left in today's show. Were there other issues you guys want to hit up?
I just see a lot of separation here happening this morning, and I'm seeing a lot of strength really in the tech stocks here once again. I mean, you can look at the Qs and you say, what the hell are you talking about? But usually your techs have a higher beta than the overall market. So normally when you see the market rolling down, 15 handles in the S&P, the Nasdaq's going to be down, more relative. It's not. The actually trading, the Qs are down 0.47%. The SPY is down 0.57%. So you're actually seeing it less. And you're seeing some individual issues like Netflix trading in the green. You were seeing a stock like Applied Materials this morning trading significantly in the green. I know it was added to Citi's focus list. That might have been one of the catalysts for Applied Materials. But even when I look at the imbalances here, look at Square. SQ. This may be to what Nick was saying here too. He's not seeing anything nerves overall in the market because the higher beta stuff, some of these tech companies that aren't even making money, are getting bid up really here this morning, or at least trading not down much. Square has a buy-in balance of 141,000 shares this morning. That is significant, and it's only down 12 cents here right now. Under normal circumstances, you come and see the market down like this, you think Square is going to be down $1. It's not. So you are seeing some relative strength in tech here, and what you might see is a rotation here happen this morning. Maybe you're going to see some of these banks, which are weak here this morning. Maybe some of the money is going to rotate out of the Goldmans and stuff and into some of the tech stocks here once again. So tech continues to show strength, and that's what I'm seeing here this morning.
Taking a look at Square here, just hanging out near all-time highs, traded down.
It looks like it's going to all-time highs, does it not?
Yeah, it's weird. You got a little wall of 57 here ahead of that. I just go back to a couple highs you had earlier in the month at 56.72, 57.19, 57.05. So that doesn't look like it's going to get there on this buy-in balance, but you do have three lows at the 57 area and the all-time high. We know what the all-time high is. It is 58.46. So S&Ps are starting to creep back. Oil is creeping back. Let's see if we want to take a look at any ratings this morning.
BTFD coming in here. Spencer, what do you got? Highlights for ratings.
First one I saw was Roku. Let me pull up on my newsfeed here. Roku, which thought catching, an upgrade this morning at Morgan Stanley to equal weight.
So they were underperform on it, and now they're playing a little catch-up rating change here this morning. We talked about this Roku, too, and it was looking itching to go, and it is now. And here we are. We're taking off. Going to get to the psychological level. It looks like a 40 here this morning. I don't know if we've touched up there, but that's a big psych level for it. It's a nice couple candles here. Roku's hot.
And who did Left hop on this last week? Was it Wednesday or Thursday?
He hopped on something. I don't know if it was Roku. Oh, you know what? It was Friday. That was Friday morning. Good call. He did say a lot of this changed in the last 6 months, so they've reevaluated their position a little bit. But what did he say?
It wasn't 6 months ago he shorted it. Remember he got on with that female analyst?
He's bullish. He's bullish now.
Okay.
Yeah.
He's bullish Roku now?
He's bullish Roku now. So
it looks good. Valuation is, it's hard to do. It's hard to do. Sit here and crunch numbers and come up with a value for Roku. But from a momentum standpoint, this thing is still just going. I mean, you got a 2-day move happening here. Can it blow through 40? I think absolutely. So I think that's going to be your first resistance point is $40. But this thing is going here now. You're chasing it a bit now. When we were talking about it a couple of weeks ago, when it had this consolidation station going on between 33 and 35, that was kind of your time to strike. Now it's up. Now you're chasing it a bit. But you know what? A lot of people that make money chasing stocks there too. So this thing, I think, is going to be over $40 here today.
And traded yesterday's high was 39.08. You're trading above that in the pre-market. Maybe a minor stopping point at 39.60. A couple highs there. Dennis mentioning, though, the double top that it had at 40.12 and 40.14. That was at the beginning of March.
A couple other upgrades being mentioned in the chat. Forward upgrade at Jeffries, hold to buy, and Phillips 66 I saw upgrade at Wells Fargo, neutral to outperform.
Amazingly, you look here and you get an upgrade from Jeffries. You think, it's going to be good, but it comes on, Ford just seems to have bad luck, and it comes on a big down day for the market, so it can't really get a kick started here. But it's in a consolidation station here too. I've been talking about the book in Ford. It's just so thick, and that's what it fights is order flow in the book. All these orders that are sitting there, you look at it and it's just thick everywhere. 1160, 79,000, 1165, 98,000, 1166, 32,000, 40,000, 1167. I mean, there's 30, 40,000 shares every penny here, all the way up to 1175, where there's 250,000, another 85,000. Then if you get up to 12, there's 1 million up there. I mean, it is so thick. It needed something like this to really start chewing through some of that stock. Can it chew through some of it today? I think so. I think this thing could get a lift here, and I think it could challenge at least the couple day high up at 1165. And it's a different style of trade. I mean, you can say, whoop-de-doo-dah day, the thing's going to go up 14 cents. I want to trade something that's moving dollars. Well, I tell you, it's thick. You can trade it in a bigger size. And as a day trader, I love trading Ford because I can buy 5,000 or 10,000 shares of Ford within a penny and not even move the stock. Usually you can, work the tick. You can get a half tick on it. So you can put some serious size on a trade on Ford and not even move the stock, which is nice. There's not a lot of stocks out there where you can have 5,000 or 10,000 shares and not move the price. So if you think, Ford's going 1165 and you can buy at 1152 this morning, you can make some money with that. So, and that's what I'm saying. I think I might be playing this from the long side here, going along with Jeffries, and I think it could challenge 1165 here today.
Okay. Coming out of the chat here, Acacia Communications, Rosenblatt is out positive on that one. This has been the old play, China ZTE play. Got the initial pop, came back down. I don't think we quite got a gap fill in it here, but if you were waiting for a pullback on this, you certainly got it. Trading up 38 cents here in the pre-market at 34 even. Let's take out yesterday's high at 34.27 and work our way back up to the $35 area. OLED, someone is noting.
Big time pop here today.
Yeah,
this is Apple news.
Yeah, we're getting news that Apple is going to be using OLED screens on their phones. Their next phone.
That's the news. Who was the screens they were using before?
And this is a report out of, I should add it to a report out of a South Korea paper citing industry sources, so nothing confirmed from the company.
It's up $13 though, so somebody's banking that this is true information. This is huge for OLED, universal display. A stock that has kind of just been hanging out here for a bit too, really in the doghouse. Then got up in January at over $200, got cut in half in the last 3 or 4 months. Is quietly cut in half. Well, this is going to, get some shorts covering, I would say, for sure. And that's what you're seeing here this morning. I don't know if it kickstarts a full-on rally in it, but up 13%. That's a nice move here for OLED.
Yeah,
they had been using Samsung, I think, Apple.
Okay.
And now they're switching to OLED.
Big pop here. Joel, I don't know what to say. This thing's going to have a wild range, though, because there's not that much in here.
No, there's not. And just looking at pre-market trading, you're trading up 13.75 at 113.40. You do have some other highs basis the daily, but nothing really significant. I do see a 113.65 high that's from March 22nd. That's currently where you're at. But then the high on that day or the next day, you're up at 120. So maybe use that as a level, fill a gap. The gap would be between 114.35 and 117.45. You did trade up to 119.30 on March 21st. So that'd be a big level to keep an eye on. If in fact you can keep going, got it going in one direction now. We'll see if sellers come in. Other stocks, Finisar likes to move with this one. That stock is trading down 4 cents. It's been in.
This is specific to the that's the one thing when you're considering sympathy, though. This is specific to that company. Right. So it's not like Apple's all of a sudden iPhones are good and all the suppliers are going to be up on this. This is a specific deal for that one. You got to think, I can't see any sympathy moves here happening. Just another Apple suppliers because OLED is potentially getting a deal. So I'd be careful with that, trading sympathy on stuff like this.
And also, I guess Samsung would be the loser on the end. So, what's a symbol for Samsung here?
Well, it's trades. It doesn't really trade here. Trades
OTC, but it's like SN. It's SSNLF.
Basically, doesn't trade over here.
Yeah,
SSNLF is the symbol. But okay. Was there anything else that we want to get to? You know what? Let's go back to the rating. There's a couple more ratings I want to hit. I mentioned PSX upgrade at Wells Fargo. Also upgrading Marathon Petroleum this morning. MPC. As far as downgrades go, nothing super notable. I see Novartis catching a downgrade at HSBC. Buy to hold. Jefferies downgrading Infinera, INFN. Hold to underperform. And that's pretty much it. Nothing super notable in initiations that jumped out to me, at least. Anything?
They also got NXPI popping here this morning. You were mentioning this one, Spencer. I mean, this looks like it's trying to get a deal done now, and everybody thought the deal was dead at the end of May. Now China looks like they've, cooled their stance here, and this thing actually looks like it might get done with Qualcomm. The deal's up near 128. The problem is now risk reward here is just not that favorable anymore. I mean, at 90, it was a lot more favorable here. Now you're at 119, so you got $8 upside. 30 points downside if the deal doesn't go through. If the deal goes through, the deal goes through. You make yourself 9 points. But if for whatever reason that deal goes into jeopardy or it doesn't go through, I think it'll be back at 90. So tough to buy here up at 119 for the last $8.
And we had I can't remember who was in the chat, but I remember one of the first couple days, maybe it was BZ Tokyo or somebody, took a ride on that when it had that big decline. The deal was still on the table. So I mean, it did take long to get, a little bit of satisfaction out of this one. Trading up 231 at 119.10. You originally saw the deal pop up to 125.93. So I don't know. I mean, if you were brave enough to buy it after that big decline, and now, the risk reward ratio is looking good here. Who knows what news has come out of Washington or whatever could knock this right back down. But there's a time that's, sticking with the stock that was moving in the news. Good returns for it. S&P futures have come back off the lows of the session. 27.05 and a quarter. We're trading down 13. That pre-market low 90 and a quarter looks safe for now. So lower end of the trading range, we'll see if the buy and the dippers can come in and maybe get this market back to unchanged on the session. Dennis, any final thoughts?
Gen rotation. Tech is looking like it wants to catch a bit here. Square is almost in the green here, but the QQQs have come a long ways back from those lows. It's now only down 0.34%. So if you're looking at what's going to be the source of strength, it's going to be like stocks like Netflix here again. I would bet Netflix is going to be up probably, and if the market keeps rolling back, Netflix pulling us out of the doldrums there. So valuation be damned, it doesn't matter. That's what's hot is hot, and what's not is not. And Netflix looks hot.
And so just going in from the chat, Blaze, new to the YouTube chats, talking about Micron, and Micron got some love in Barron's again from Tune and Ray. AI technology revolution is just getting started, and Micron seems to be at the forefront of it. 61.35 had the big buyback last week. If you're trading Micron, 63.42. March 13th high. I know it's $2 away. The high close in the move, though, was made yesterday at 61, or on Friday at 61.35. Let's take out 62 even. You do have sellers congregating there. Thursday's high 61.99. Friday's high 62.10. So keep an eye on that as resistance. High the move up at 63.42. All right, Spencer, you want to wrap things up and preview Wednesday show? Or are we going to be hump day tomorrow?
We are going to hear from James Putra from TradeStation on tomorrow's show. He'll join us at 8:15. We're also going to be joined by Todd Gordon from TradingAnalysis.com. He is also a CNBC contributor and has an amazing trading setup that he'll show off if you haven't seen it before. That'll be on tomorrow's show, Todd and James Putra. But that's it for us today, folks. If you missed any part or just want to hear our lovely voices again, you can do so on a podcast, iTunes, SoundCloud, Stitcher, or TuneIn, and join our chats, premarket.benzinga.com, youtube.com/BenzingaTV. Hope you all have had a good, nice long weekend, have had a good morning, and have a good rest of your day. And we will see you guys on Wednesday.